Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, December the 21st. The year is 2020. Let's talk trading, tools, education, experience, and know-how. Things that you need to trade. But you have to remember one thing is you watch these videos, and that is these videos are for educational purposes only. Your results may differ from mine. Now, tools, what are the tools? Well, they're the indicators that I and others have put out there. Those are the tools. And the methods, the systems, like the buy zone, the rat zone, the wick zone, fading the pivot, filling the gap, things like that, fading the gap. Those are all the tools. I give you the tools, but you also need the education so you can use the tools, so you use them properly, so you understand the tools. And so that's one of the reasons I make these videos. So you've got tools and you've got educations. That's what I can give you. What I can't give you is the experience. That's on you. You have to trade. You have to get that experience. And the only way to learn how to trade is to trade. Now, some people trade demo accounts, but it doesn't really work as well as if you have some skin in the game. And that's why I advocate trading for, a dime a pip. You trade for a dime a pip, you can put 10 bucks in the account and see, or maybe $100 in the account, and you trade for a dime a pip, you got a lot of room to mess up and not kill yourself. So, if you can go in there and get that experience and figure out things, because you have to, I can show you how to use the tools. I can, give you that education, but until you actually experience it and do it yourself, you'll never know how. And see, that's the big thing. Now, I've probably talked about this in other videos. I think I related it to car mechanics, wrenching on cars, or doing fix-it things, around the house, around the ranch. You need the right tools for the job. The right tools for the job, especially when you're working on cars. Oh, it just makes the hardest job so much easier to do. You have that wrench with the different angle or the ratchet. You've got those knuckles and elbows and extensions. You don't have those things, and you have multiple ones. Those are the tools. The education, you can go on YouTube and somebody will show you how to do it. You can get the manual. But then you got to get out there and get greasy and turn those wrenches yourself, bust a knuckle or two so you get the experience. And then once you do it, then you know how. I mean, once you change a water pump one time, now you know how to change water pumps. You've done it. You have the confidence that you can do it again. And that's the same thing with trading. Once you get in there and you start trading, you make a profit. Now you have the confidence that you can do it. But so many traders are looking for a tool that so they can skip these other three steps. Give me that indicator, give me that bot that'll make me $1 million so I can drive the Ferrari, right? I mean, you see these guys all the time out there. Just doesn't work. If it did, they wouldn't be trying to sell you that method or that indicator or that robot that'll make the Ferrari. They'd be making the Ferrari and they'd be doing other things rather than try and hustle you, for your $49 or your $499 or your $4,999. And you guys know, you get the same ads probably that I get. But anyway, and the main thing is, part of that education, part of that experience, and part of that know-how is the risk management, So you understand why it's so important not to lose any more than you're willing to lose on any one particular trade. Now, let's look here at the pound. you know, looking at the monthly chart, you can see right now it kind of looks like a doji, right? We're only a few pips above the open or the previous close here, about 20 pips at the moment. Or I'm sorry, about 13 pips. I was looking at 19.99 rounding up to 20, but we're actually about 13 pips above that monthly open. Maybe I should change this to on the magnified market price. Let's put the period, and we can set it to current since we're on the monthly chart. So yeah, 13 pips above the open, now 14, and you can see the distance between the high and the low for the month. Now we move to the weekly, and once again, we had a gap down. Price tried to move up to fill it, but guess what it did? It filled that gap right here from last week. Now, what happened? Last week here, price gapped up. We had the coronavirus vaccine news. And what happened this week? A new strain of coronavirus hit London and it tanked the market. I mean, it tanked the market. But you see here on a weekly basis, we're now 146 pips off that low. So, you green rats, you guys feasted. But this is what's interesting. Here's that opening range for the month. I showed you this last night. If you would have taken that short here, you paid off. If you would have taken the short at the open for the year, it paid off. And then coming back the other way, if you would have caught it the other way, taking the breakout here of the opening range for the year, we can scrunch that up if you want. That opening range, first day of the year, you can see here, you'd be 66 pips to the good. So once again, these horizontal line trades, you know these levels beforehand. All you do is take the trade. You know, this isn't hindsight. I mean, I showed these things. I show these things every day. So, you know, these simple trades, whether or not you choose to use these, whichever method, that's up to you. Once again, we went below the yearly open. We're back above it by 90 here. Now 89, as price is moving. But you can see this huge gap right here. And then you can see there was the gap here, from here down to here, that got closed today. And then price shot back up. Inside bar, we broke it to the downside, almost got to the monthly inside bar reversed. So you can see here, once again, there was a profit to be made trading inside bars. I pointed this out last night. You can see here we've got a lot of ranges over 100. In fact, looks like more ranges over 100 than under. The pound leading it with 252 pip between the high and the low. So the opening range this week is huge. I would imagine we stay within it, but who knows what's going to happen. We know the daily open today. This is the weekly open right here at 3,400. It could shoot back up. It could close the gap on the upside. Who knows? Maybe they'll come out with the vaccine for the new mutation, and it sends the market soaring again. But I think I pointed out yesterday some of these levels here where you might want to go long if price reversed. It's just trading what you see, looking to the left. Once again, that comes from experience and know-how. Now the pivot, you can see here, if you faded that pivot, you should have taken your profit before the market took it back. I mean, you went long at what, 34.10. You had a high at 38.9. You had a chance to make 20 pips. Nothing to sneeze at, right? Now, You pivot traders, in fact, I've been corresponding with one guy's been asking me questions. I'm just going to tell it to you straight. I sent him this email. You don't need to get cute, okay? You know, based on statistics, on the same day, price hits the pivot usually 70% of the time or better, okay? You don't need to split any more hairs. You take the trade in the direction, you set your stop loss. As it moves, you can move your stop loss up. Sometimes you get a little, and 20 pips, isn't really a little in my book. In some people's book, it might be. But the point is, if you can make 20 pips a day, you will be driving a Ferrari if you're compounding. Point being is, you don't try to refine this anymore. You just trade it. Sometimes you get a little, sometimes you get a lot. Otherwise, you're just overanalyzing, splitting hairs. You're going to have the paralysis of analysis. Just fade the dang pivot. That's all you got to do. Okay? That's all you have. You don't need to do any more analysis on it. Just make sure that the pair you're trading is those pivot fades are working. Okay? That's all you have to do. You don't have to say, well, if it goes down this, how many pips, this, that. Forget that noise. Just forget it. Be in the moment, trade. That's experience and know-how talking. Hey, you green rats, I hope you feasted. You can see here, H1 was red. You're kind of violating the rule of thumb here. But, if you're trading in that rat zone, and maybe you're trading M5, maybe you're trading off of the M15, but you can see you had some nice rat reversal set up here, breaking that, and then there was some nice trade, nice move out of there. Nice trade to be had. You could still be riding that one trade. So sometimes you bend the rules, sometimes you break them. Just like in the Matrix. Look at that. Price came back down, touched the monthly pivot, and reversed. So once again, you pivot traders, it already took it out once, but if you were targeting it, there was your target, and then you see which way price left off that monthly pivot. Once again, trading what you see, horizontal lines, no squigglies necessary. On the missed pivot, here we go. Yeah, we missed that daily pivot. We took this one out. We took this one out. That was from, a few days ago, back on December the 14th. So now we've got this one. So we still have a few missed pivots this year. But you can see last year, 2019, zip, and only 4 in 2018. So once again, high statistical trade, high probability, high statistical trade. You don't have to overanalyze it. Don't overthink it. We never hit the wick zone. One of my trading screens here. Oh, we're in the 40 launch pad area. Once again, Walmart line at 20. Just trade what you see. Nothing difficult. And just the simplified, once again, the Walmart line long at 20. You're at 42 now, 22 pips. This stuff is not that difficult. So, fellow traders, just remember, tools, education, experience, and know-how. Because it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is TheRumpledOne, over and out.